Hi, Jateen sir. Good morning.
Very good morning.
Sir, what is the outlook for the market?
Jignesh, the outlook for the market is a little bit on a bumpy ride ahead for the March month. As we have seen, the start of the March month has been a little bit on the volatile side for all the commodities. So let us start with bullions prices. Looking at the scenario currently, where the COMEX prices are trading, hovering near the $1,700 mark in the COMEX front. The scenario is like in domestic market also, gold prices will be, fluctuating between 45,500 on the higher side and on the lower side, 44,000. So this 1,500 point range is the market where the traders need to capture the trend. And, whenever it is near this 4,400 zones, 44,000 zones, one needs to, get in the buying side. And whenever you see the prices escalating beyond 45,000 towards 45, 300, 200 odd zones, one needs to book their profits and also can go short and try to capture the downside rally again. So this is the 1,500 point range which I am seeing in gold prices and domestic prices.
Right, sir. So what about silver, sir?
Talking about silver, it is also going to be in the range bound scenario as well, but the range might be a little bit more broadened and widened compared to the gold prices. Silver on the hand has an upper resistance near the levels of around 69,000, 69,500 of zones. And on the lower end, the supportive places are at around 64,000 to 65,000. So one needs to be trading in this zone whenever the prices are near 66,000 of zones. One can get into buying side of for silver, keeping a stop loss below 64,000. And whenever the silver prices are around about 69,000 of zones, one can go short and book their profits as well, if and their buying position, and keep a stop loss above 70,000 for silver.
Right, sir. Sir, what do you think about metal, sir? Metal pack?
Yeah, so base metals are again seeing some profit booking after a very good run up that they have seen in the last few months. So talking about the copper prices, especially the market has been a little bit on the profit booking zone whenever it is oscillating towards the 700 odd zone mark. So the resistance point will be kept at 690 to 700, 705 odd zones. Till the time 710 is not breached on the higher side, copper will face resistance whenever there is rises. So one can look to go short whenever there is around the levels of around 690 to 700, and book the profits at the lower end towards 680 to 675. Again, the supportive will be seen near the levels of around 660 to 650. So once it starts trading below 650, another round of selling might get into the market, and which might take the prices towards 620, 610 options. So till the time one can trade in between this zone of 655 to 690 in between this zone.
Right. Sir, what do you think about crude and natural gas?
Crude has again seen a very stellar rally just like base metals, but in the last couple of sessions we have seen some profit booking happening again, like from the higher levels. So there is a little bit of profit booking as well because of the uncertainty that the production cut would last much longer, because once viewers also start producing at higher numbers, we might see some issues with the supplies excessive supplies might start kicking in, we should take the crude prices again towards the levels around 4,400 to 4,300 odd levels. So advice is on the short-term traders to be on the sell side whenever it is, you see the prices near 4,800, 4,750 odd zones, keeping the stop loss above 5,000, and on the lower end, look for the targets of around 4,400 to 4,500 for crude prices.
Okay. So what about natural gas?
Yeah, natural gas, it will be on a little bit on the weaker side since the winter sessions have been closed and the summer starts in, and we might not have so much of an issue with the supply side over here. Although the prices have already cashed in this summer trend, so I think the base formation is around the levels around 180 to 175 odd zones. So one should be looking at buying natural gas near the levels of 170, 185, and not before that. The prices will touch those levels at least once, and I don't think so the prices will fall below 160. Historically it takes support at these levels. On the higher end, stiff resistance is placed at 200 and 210. So one needs to be cautious whenever the prices are scaling towards 200 odd zones. Till the time it is trading below 210 on closing basis, I do not see any substantial rise in the prices as well. Once it starts trading above 210, then one can aim for the targets from 230 to 45 for short-term traders in the natural gas prices.
Right, sir. Thank you, sir. Thank you so much for your time.
Most welcome, Dinesh.